Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode 239, 1st of June. So a new month has started. The month of May was reasonably horrible, and hopefully June may be better. The GDP numbers are out and they are in line. Everything is currently stable on the global front as well, but markets are a bit choppy uh, in terms of the direction is unclear. We've had a bounce, but whether that bounce sustains or not is still a question. Today we are also going to showcase some performance and show you that with the core strategies you can start almost anywhere in the cycle. It really does not matter if it's a long term game for you. Even if you're coming in at the near the peak of the market, intermediate peak, it will still see you through when you bring in your capital gradually, or even otherwise if you are in the game for reasonably long enough. So in terms of the market, IT stocks led the market down. The markets were actually sideways to positive for some part of the day, and then there was a sharp fall towards the afternoon, and with some recovery at the end. But largely, IT, pharma, real estate, consumption, these were the pockets where most of the damage was done. Banking was the only sort of sector which was standing up, and autos were sort of flat along with metals. So very polarized day in terms of where each sector is going. I think with June 8th, I think is the RBI meet, and there are expectations of another 0.4 or 0.5% hike. So I think market may remain muted uh, in anticipation of that. Uh, the good part, as we also noticed yesterday, was that small and mid caps have bucked the trend. So small caps were up 0.6%, mid and small cap index also up 0.46%, while the larger caps were down. Adani stocks as a group are down. Nifty Next 50, which is populated with a lot of Adani stocks, is down 0.94%. Nifty 50 was down 0.37%, and CNX 200 also down 0.4%. Now, within the weekend investing universe, MI20 and MI35 are shining brightly. They were up almost 3% each. These are both rotational strategies. They went down also sharply, and then they're coming back up also sharply. They never go to cash. ATH2 has also been doing well this week, plus 1.1%. MI50 is up 0.82%, and the rest were not very notable. With MI NNF10, of course, noteworthy loss of minus 1.19%. As I said, largely due to the drop in one group of stocks. We've had gains from that group, and now we are giving back some of those gains. Some very large winners today. So Timken Industries plus 17%, Sundaram Finance plus 12%, Renuka Sugars, we hold this plus 11.5%, RHIM up 11%, we hold this as well, Ratan India up 10%, we hold this as well. So good day for several of our strategies. KPR Mill down 6%, CDSL down 5%, Brightcom India Bulls and Sapphire Foods also down 5% in the losers list. So this is the sort of mix of the day. So now coming back to where I started in terms of you can start anywhere, is I'm going to showcase you one or two strategies that we started last year. So this was started core strategies. So we started many strategies, but these are core strategies. So MI20 is basically mid and small caps put together, 20 stocks derived from the mid and small cap 400 index. So you will not take any stock beyond that, and 20 stocks started with equal weight, and gradually the weights may change, and rotational in nature. So every week in the rebalance, some stocks may get out of the portfolio and some new ones may come in, but largely we've seen outperformance all through since it started. So from July mid, when the series has started, we've seen a reasonably outperformance till January, and after that the index has also fallen. The dotted line is the index. So the mid cap and small cap index rose from 100 to 115 and is now back at 100. So the index is absolutely flat from where we started this strategy. The strategy is up 10.5%. So some outperformance is there. Please also note that these numbers are after Smallcase has adjusted them for the next day's open, high, low, close weighted average. So uh, technically there could be a case where some people are even beating this performance from that point of view. I mean, earlier it was based on Friday close, but this is now based on the weighted average of open, high, low, close of the next day. So there is no question of slippage on these numbers, and these are actual numbers that people have been able to get on their portfolios. Again, another strategy, MI35. This is purely small caps. So it tracks the small cap 250 underlying index, which is a 250 stocks from the small cap universe, and this will select 35 stocks from that universe at any point of time. So as you can see, it was pretty much in line from July till about December, and then post that there was an outperformance in the run up. Then the drop has been sort of similar, and again there was an outperformance on the upside, and now it is up at 108.17 since start, whereas the index underlying is at 96. So again some outperformance is there based on the reference to the benchmark. So what you can see here is that while the index is a good 20% below the top, it did not really matter when you started this, if you're going to do this for 2, 3, 4, 5 years, because I'll show you in subsequent daily bites, the probability of being in positive after starting from at any point of time is very high once you cross 3 years. The way the cycles have been moving in the market, at least so far, if you started at any point in the market, 3 years later you have a very, very high probability that you are in the green. So if you really time it badly because of bad luck, you start at the very peak, still within 3 years, and if you're bringing in your capital gradually, you will definitely should be at a reasonably good position there. Maybe not at a very high CAGR, but at least in the green territory. So I'm going to give you that data in a day or two, but just I wanted to sort of encourage people that don't get disheartened because market is down. You are waiting for the market to bottom. Nobody can catch that bottom. This bounce that we've had already, the bounce is how much is the bounce on Nifty? So if I see the Nifty charts, let me just check my charts. The bottom was somewhere around 15,600 something in March, and we are 16,500 odd. So already a bounce of 800-900 points is there. What if this bounce extends and becomes a new leg of rally? Have you waited for the bottom and not acted so far? Then if let's say some news comes around that there is no further tightening that the Fed is doing, market will be up 2,000 points in 3 days. So you need to get started, and you need to deploy capital, and you need to be invested in the market to get those gains. A lot of people want to wait for better returns or better levels to start with. Sometimes yes, you may get lucky, but most of the times I've seen, at least in my 27 years of career, I have not been able to time any bottoms. And what I've seen is that regardless of the market movement, if I bring my capital in gradually, like my own portfolio, which I'm showcasing, the long-term SIP strategy, I'm bringing in a weekly SIP on that, and we've done 35 SIPs on that since October. Now that portfolio is hardly down, on the original small case, like 0.5% maybe. On the XRR, it's showing minus 10%. But there is no worry, because I'm going to keep on adding capital for the next 3 years in that at a minimum. And I know, at least I know with good confidence that I will see a very good return on that portfolio. But if I just keep waiting and I did not start in October, maybe right now I also may still have been waiting, and I still may say, that let me wait for another 3-4 months, maybe Nifty will go to 14,500. So unless you have a view that Nifty can go to again to 7,000, 10,000 kind of levels, and I must wait for this huge crash, maybe yes, you could do that. But somebody who's having 3 to 5 years of runway, who's wanting to get invested, anytime is a good time to start. And we've shown you with enough data, and I'll show you more this towards the end of this week, that is the case, that you can just start anywhere you like. So thank you so much for watching the Daily Bytes. Please like and subscribe to the channel. Please share it with your friends, and do keep sending your feedback. That helps us a lot. Thank you. Bye.